guys, Charlie giving you Wednesday's video, and we're going to title this, I think, "Hunting for Stop Loss Orders," because this was a trade that we took yesterday in the trading room, which is an intraday trade, but it can be applied to any sort of time frame. And lots of people are always thinking about what the market makers might be doing to try and hunt down your stops and things like that. And there's all these conspiracies out there. I mean, the market is a mechanism for fulfilling orders. So if there are a lot of orders in a certain level, at a certain level, the market will try and work its way to fulfill those orders. It's not your broker doing it. Your broker can't move the market. So yes, your broker can't move the markets, and yet people seem to think that their broker has moved the market. Now, don't get me wrong, brokers can spike their individual prices. Yes, they can do stuff like that, but they can't move the market as a whole. So if a price is moving up to a certain level, broker could just move their prices, just an extra few pips to not nick you out. Yes, but they can't move the market all that way. But anyway, nevertheless, the markets are a mechanism for filling orders, and so sometimes we spot levels where a market may want to do that, especially when you're in an overall upwards trend, like this dollar yen example from yesterday, where there's been in an upwards trend in the recent past. And as we can see here, it's gone into a consolidation zone. So we've made a couple of lows here, and then we've made a couple of lows here and here as well. Now, when I see this sort of price action going on, then I know that there's the capacity for the market to want to come down and take these lows out, because there must be orders stacking up below these lows, because you know what traders do. We all do it. I put stops behind lows obviously at times as well. So it's a natural level where stop loss orders start to accumulate. And so when we see multiple levels all in the same vicinity, then at some point it's likely that the market is going to want to come down just to take those lows out. And that's what essentially happened yesterday. So what I'm saying to you here is, have a think sometimes about when a low has been placed in and whether a market may want to come down for that low. Let me give you another example. I'm going to give you a few examples here today. So let me give you an example of the dollar index here. So hopefully you can see this dollar index. I'll just make it a little bit. There we go. Right. So this is a weekly chart of the dollar index. Similar type of thing, whereby the index has made lows here, here, and here, and then once it starts coming down, then there's pretty good odds that it's actually going to come down and want to take those lows out to take out any stops that may be in the market related to the dollar index. So, and then let me go to another example of the euro dollar on a weekly chart. Now, this is something I've been talking about for a long time with some of our traders. Look, I've still got a red horizontal line on here from now, even though the euro has subsequently broken out of all of this. But if I take you back here, it's a weekly chart, horizontal resistance, line here, showing all of the multiple tests of this certain area, all around which was around about 114 or so. All of those tests. So when I was going along earlier on in the year on euro dollar, because there were reasons down here, divergences and all sorts on higher time frames, then there was always at the back of my mind this capacity for the euro dollar to come up and break all those highs, because for the obvious reasons that markets like to go and take out prior lows, or because a lot of the time there will be stop loss orders behind those. And when you've got lots of touches against an area, at some point the market's likely to come and test it. So have a think about that, because you can see that's what happens subsequently with the euro dollar. So I just want to give you some food for thought there. When you're placing your trades, if you see this, especially this type of price action where you're seeing lows getting hit several times, then it's likely at some point the market's going to want to come back for those lows or for highs if it's a high it's been making, because very often the market will want to come down or up and take those orders out. And sometimes you can be on the right side of that. You can trade having that information, knowing that information, you can trade with that in mind. So have a think about how you could devise a strategy around something like that, around that pattern. I shall leave that with you. I'll be back on Friday for live trading.